Hey, it's Tom here and welcome back to the channel. Now this is going to be part 2 of my highlights from the 2021 Alibaba Investor Day. If you didn't already catch part 1, definitely go ahead and check that one out. That is basically reviewing my highlights or sharing my highlights from the CFO presentation from both Maggie Wu and also Toby Zhu. And in this video, I'm going to share my highlights from the CEO presentation. The CEO of Alibaba, of course, being Daniel Zhang. So this was about a 45-minute presentation. The CFO presentation was in English. This one was not, but I have gone through and read all the subtitles through their presentation, and luckily all the slides were in English. So I'm going to work through in this video and share some of my key takeaways from that webcast with Daniel Zhang. But before we get into that, we do have a sponsor for today's video, and today's sponsor is Hatch. Now, Hatch have been my personal broker of choice for over 2 years at this point. I was initially, before I was a customer of Hatch, doing all of my US transactions, buying shares on US exchanges through one of the big banks here in New Zealand and paying $90 a trade, which unless you're investing really substantial amounts of money, can tend to, eat away and add a lot of frictional costs that take away from the compounding nature of stock market investments over time. So I can now do those exact same trades for as little as $3 in Hatch, which has been a lifesaver in terms of fees. And they've continued to improve the platform for as long as I've been a customer. This year in 2021, they launched kids accounts where you can get, again, the compounding started really, really early for your kids with even lower fees and frictional costs than the traditional Hatch accounts. So if you're interested in checking out Hatch, you'll need to go to the link hatch.as/investingwithtom. If you go to that link, sign up and start a new Hatch account and deposit $100 or more into that account, you'll get a free $20 top up so that you can get started investing with a little bit more money. Okay, so in terms of Daniel Zhang's presentation, a lot of it was really sort of a high-level overview of Alibaba's business. If you've only got 45 minutes and you're the CEO trying to give a presentation on Alibaba, that's about all you can really do, is give kind of a high-level overview, because it is a very diverse and quite complex business. There's a lot of subsidiaries, there's kind of core baskets with China commerce, international commerce, digital media and entertainment, and cloud are kind of the core baskets of that these different subsidiaries and so on kind of slot into, but there is a lot going on. And he spoke about basically Alibaba's mission from when it was first founded by Jack Ma. This was the 22nd anniversary of Alibaba when they did this Investor Day, and the initial goal for Alibaba was to basically create a company that will last 102 years, that would span 3 centuries, of course, the 1900s, the 2000s, and hopefully the 2100s. So we're now 22 years into that journey, 80 years to go to kind of reach that milestone. So that was a nice sort of update on that front from Daniel Zhang. He reminded us of some of the changes in financial reporting for the e-commerce business, which I won't get into too much detail on that in this video because I covered that in part 1 from the CFO presentation. But that was great. That will give us a lot more granularity in terms of trying to understand Alibaba's e-commerce businesses. Now, he started off the core of this presentation with a focus on e-commerce, which is still a massive component of Alibaba's business. And he gave us, some highlights of how big Alibaba really is. He said they've got the largest and most valuable consumer base in China. They have a huge number of annual active customers, and they actually have really good retention rates. So people that do spend money on Alibaba tend to come back and continue spending money over time. And they see that the average spend from a customer tends to grow the longer that they are using one of the Alibaba platforms, and the longer that they're using one of the Alibaba platforms and the more money they spend, the better retention rates we tend to see. So from sort of the mid-range spenders, which is anywhere from 2,000 to 7,000 RMB, which in US dollars, I've done the conversion here, is about 313 to 1,100 US dollars. They have about a 98% retention rate from those customers, which is just fantastic. And from anywhere north of 7,000 RMB, they have a 96% retention rate. I have a feeling I might have actually jotted those percentages down the wrong way around, so I'll put the slide up on the screen here, but nonetheless, that is a very high retention rate, and it sort of tends to grow the more money that people are spending on these Alibaba platforms. So in terms of future growth for e-commerce with Alibaba, Daniel Zhang gave us the basic formula. He said it's going to be driven by user growth, it's going to be driven by basically higher spending over time, or what he described as the share of the wallet expansion, and it's also going to be created from value creation for the merchants as well. So let's start off with basically the user growth side of it, because that is really where Alibaba has already probably made the most progress, I would say. There's a little bit of room still to move here, but they have a huge percentage of China's population using one of their platforms. So currently China has a population of 1.4 billion people. Of those 1.4 billion, 1.2 billion have access to the internet, and Alibaba have 953 million annual active consumers. So a huge proportion of everyone using the internet in China is already an Alibaba customer. So there's still a little bit of room for growth there, but they're getting towards probably the maximum number there, unless China's population continues to explode or something. We've actually seen declining birth rates in China, which is something I've picked up from my A2 milk research, which is a topic for another day. But they have a very high proportion of China's population using one of their platforms. And just to give you a feel for how that kind of changes in the different stages of development in terms of different regions in China. In tier 1 and tier 2 cities, 99% of the population are an annual active customer of Alibaba. So basically everyone. And that is actually up from somewhere in the high 80% range. Again, I'll put that up on the screen here, but that's actually grown quite significantly in the last year. I think it was around 87%, but you'll be seeing the number on the screen here in September 2020, and that's now up to 99% in September 2021. In terms of capturing a share of the wallet expansion, as Daniel Zhang described it, I will put up another slide here which shows the market size, also the sort of category penetration and annual active customers, and also the market share from Alibaba. And this just gives you a feel for how big the potential wins are if Alibaba are able to capture more of the wallet expansion in these different areas. And that was really interesting to see kind of the different types of spending that Alibaba captures, whether that's electronics, or whether it's travel or food or transportation, or a whole range of different things that people spend money on in their daily lives, where kind of Alibaba fits into that entire sort of ecosystem in China. And finally, they really want to improve the value proposition for their merchants. And they want to do this by basically improving the data and analytics for the merchants selling products on Alibaba, again, so that they can become more efficient in their own businesses and see Alibaba platforms, Taobao and Tmall and Lazada and AliExpress and so on, as sort of more attractive places for them to sell their own products. And they also want to have basically some of the best supply chain management, order fulfillment and shipping in the industry as well. So that if someone is selling a product on Taobao, for example, they can have a really high expectation that their customers, the people who buy that merchant's product on something like a Taobao, will actually receive that product very quickly, and that makes the people selling the product look a whole lot better as well. And in terms of delivery, Daniel Zhang shared quite a bit of the sort of targets that they're working towards and some of the things that they're also achieving at the moment. And depending on the product and also the business or the subsidiary, the e-commerce platform that a customer is buying from, they have sort of different target ranges in terms of when they want to get that product delivered. They have some businesses that are kind of an equivalent to like an Uber Eats or something, where they basically want as fast a delivery as humanly possible. Anywhere from sort of 30 minutes to an hour is what they were classing as sort of the instant delivery. And even on the longest time frame kind of end, they're still talking about 1 to 3 day fulfillment, which has improved massively over the past few years. Next up, Daniel Zhang basically compared Alibaba's core China business on the global scale, so that we can get a feel for basically how big a e-commerce giant Alibaba is versus some of the other well-known e-commerce businesses around the world, like an Amazon, or even still in China, a Pinduoduo or a JD.com. And Alibaba is the largest quite easily. Just actually the core China commerce business is larger than an Amazon Amazon or larger than a JD.com in terms of monthly active users and the GMV of their sales. Obviously, Alibaba has a slightly different business model to something like an Amazon. Amazon is basically selling a lot of their own product, where most of the Alibaba platforms are more kind of connectors between buyers and sellers. So they're not necessarily selling their own products, they're more facilitating a platform for other people to run their businesses, and they're making money from things like those merchants running ads and so on. So it's a slightly different business model, or quite a different business model to a JD.com or an Amazon, but nonetheless they have massive scale, and that was just sort of looking at their China core commerce business. If you continue to look down the list here, you'll see other businesses like Lazada, for example, which is owned by Alibaba, and sort of a number of other Alibaba e-commerce platforms that show up fairly highly ranked on this list. And one of the crazy things is that they have companies like Lazada already fairly high up that global e-commerce player sort of list, but they still have really low market penetration in some of the markets that they're targeting. They looked at the EMEA region, which is basically Europe and the Middle East, and they said that they only have about 12% market penetration in that region, and only 11% in Southeast Asia. So there's still a really long runway for growth, and these businesses are already massive. And although a lot of them aren't massively profitable yet, and this is something that the Deputy CFO, soon to be the straight up CFO, Tony Zhu, talked about in his presentation, which I covered in the previous video. A lot of these businesses are still in sort of the seed phase and trying to grow users and mindshare as fast as possible. So they will pull the profitability lever at some point, but they're still really trying to scale. And when you've got market penetration rates of like 12% and 11% versus 99% in tier 1 and 2 cities in China, there's clearly still a lot of room for growth. That's not to say that they will get to 99% in some of these regions, but they can certainly capture more than 11 or 12%. Now, the final thing that was really covered in terms of the core business, I will get into a final topic that Daniel Zhang covered after that, but the final part of the actual business performance is around Alibaba's cloud, and this was a core part of the presentation from the CFO and Deputy CFO as well. And basically, Daniel Zhang shared a lot of kind of what they're doing with the cloud business and his thoughts on that. So he gave the example of DingTalk, which is their sort of enterprise digitization part of the Alibaba cloud sort of ecosystem, which really is an ecosystem. Like a cloud business has a whole lot of services kind of bundled into that to meet the requirements of a whole range of different customers. It's not like a cloud thing is just like one product. Like it's quite a diverse set of offerings. So they talked about DingTalk, they talked about some of their proprietary technology as well. They gave the example of AI, artificial intelligence, and some of the things they're doing there around image recognition and voice recognition, and also intelligent healthcare and transportation kind of initiatives as well. They talked about PaaS, which is basically platform as a service. There's a lot of equivalent, PaaS services from Microsoft Azure and AWS and so on in the West. They talked about some of the things they're doing with devices, so processors, also bots and cloud servers, which again, there's a lot of US equivalents of kind of what Alibaba is up to there. And they also talked about new frontiers, which is starting to stretch my circle of competence when it comes to cloud and technology, but interesting to see some of the stuff they're doing there as well. And they really described the Alibaba cloud business that they have been building very rapidly over the last few years as like a full stack offering. Like I said earlier, a cloud offering is not just one little bit of software or anything. It's quite a diverse range of different services and so on. So they described it as full stack. And interestingly, Frank Tabor actually, I saw a tweet from Frank last night. Many of you will know him from the Punch Card Investing channel. He did some really interesting numbers on Twitter yesterday about how valuable he thought the cloud business could be in a few years' time. The organic growth from cloud in China, I think, is forecast to run at like a 37% a year clip over the next few years. So if you're interested in checking that out and some of Frank's valuation work on Alibaba Cloud, that will be linked down in the description below as well. And finally on cloud, they shared a couple of sort of case studies on things that they've done with various aspects of the cloud technology offerings that they have. So they talked about something called City Brain, which is basically an initiative that has improved the efficiency of transport in their cities. They talked about using robots for last mile delivery, which are coming in at about 1/3 of the cost of, human labor, basically. And they've delivered over 1 million packages with those bots. So they're starting to get up to some pretty serious numbers here. And I mean, 1 million deliveries in the grand scheme of Alibaba's overall business is not much. Like, Alibaba's a monster, but it's really fascinating. They're not running a trial where they've delivered 100 packages. They're starting to get some pretty meaningful numbers here, which can hopefully scale over time and help them to become, more efficient in their logistics sort of networks. So that was interesting to hear. And they also talked about cognitive AI, which again is kind of stretching my mental capacity when it comes to technology. But apparently this is what they've just said. I've just pulled this off the slide. Largest artificial intelligence pre-training model, very, very efficient, and the leader in terms of having a low carbon footprint kind of on that front as well. So again, stretching my, the cognitive AI is stretching my cognition when it comes to understanding cloud tech, but really interesting stuff that they're doing here as well. Now, I was quite interested to see that probably the back, maybe 1/3 of the presentation, probably about 15 minutes of this presentation, was actually spent on ESG. Now, I don't have a huge amount of insight to offer on ESG type initiatives, but I'll give you some of the basics that Alibaba are focusing on and some of the targets that they laid out. So their ESG strategy basically covers kind of 4 different segments of people. The first one is the general public. Next up, we have customers, suppliers, and business partners. We then have indirect workforce and also employees. So they're sort of the 4 baskets of people that they are focusing on with their ESG initiatives. And they've set out the target to, 1, become carbon neutral by 2030. And they also want to halve the carbon intensity of the cloud business by 2030. So I've got a bit of experience with sort of carbon accounting and things. Probably quite a different landscape to what Alibaba's doing, but I've kind of seen some of the nuances of carbon accounting and some of the levers you can pull in sort of the New Zealand agriculture industry. So I would be interested to dig into some maybe the finer details on what counts actually as Alibaba's carbon footprint versus their merchants or suppliers or whatever, and what they actually want to halve versus what some of the other people have to take care of. That's maybe something I'd like to dig into at some point, but those are some of the targets that they've laid out. And in terms of social responsibility, the S on ESG, they've actually put together a 20 billion RMB fund, which again, I've done the conversion here, is about $3.14 billion US, to focus on technology, economic development, job creation, training and support, and to also care for vulnerable groups. So really a very wide range of things that have been covered here by Daniel Zhang, the CEO at Alibaba, but he sort of wrapped the whole presentation up by essentially reinforcing some of the targets that they have given in a previous Investor Day. I've done a video on the channel here before called, I think it was something like How Fast Can Alibaba Grow? And that was basically looking at some of the targets that they've laid out for 2036 in terms of annual active customers and extrapolating out some of sort of the average spend data and so on as well. And I was basically trying to convert those sorts of numbers into like a compounded annual growth rate for revenue in their business, and was using that in some of my valuations and so on. And they basically brought up those exact same 2036 targets again, reinforced them, said those are still the numbers we're aiming for. We haven't dialed them back or made them more aggressive targets or anything like that, but they reinforced 2 billion annual active consumers. They want to create 100 million jobs, and they also want to have 10 million profitable SMEs. So that is part 2 of my highlights from the 2021 Alibaba Investor Day, and this is probably going to be my last video for 2021. So I'm going to be sort of signing off here. I do have quite a long kind of break planned, so I expect there will probably be actually not a whole lot of content coming over the next few weeks, but I will certainly be back and hopefully fully energized in a few weeks time to keep giving you guys the content that you want. So if you did enjoy the video, please hit like and also subscribe if you're new here. If you're interested in the Hatch Off offer, you'll need to go to the link hatch.as/investingwithtom. Like I say, that's it from me for this one, and I'll see you in the next video. Cheers.